Well, I'm Penelope Prompt, otherwise known as Inga Hillegas. So what I want to talk about today is product related. I'm going to stay behind the podium because I will probably fall down if I don't. But Fidelity Life Association, and I need my clicker here, I guess, is a company that's been around for quite a while. So I'm going to take you through a little bit about the company, a little bit about the products, and then just a little bit talk about non-med and non-medical life insurance and where it fits in the marketplace and where we fit in the marketplace. So Fidelity Life, is, like I said, has been around for a long time. It's actually been since 1896 is when Fidelity Life started. It was called the Mystic Workers, and it was one of the first life insurance carriers to provide life insurance for Middle America, for workers. And you know, that being said, you know, that is kind of our niche, serving Middle America. And what Fidelity Life has done is revisited that origin of serving Middle America by finding ways to provide exceptional you know, value in life insurance itself for Middle America, and package that together with the ease of process and the efficiencies and the innovation in our technology that we've brought to the table as well, to bundle it all up and make it a nice package so that this market can be served. So with that, you know, you can see that, you know, we really do pride ourselves on providing that guidance and the relationships that we do have and growing those. So first of all, why non-medical life insurance? And Joe said it today, and if I had a dime for every time I heard the grossly underserved middle market, I probably wouldn't have to work anymore, because I've heard it a lot, as I'm sure you all have as well. It is out there. The LIMR studies are out there. I'm sure you've seen these studies. I'm not going to read them to you, but also Joe mentioned that Fidelity Life did some focus groups, and that is what we found, that it is really an underserved market. But there is a need. People want insurance, but agents are not talking to those people. So how do we get to those people? And that's one of the things that we also want to help with in regard to bringing this all into a package that you can serve this middle market. Profitability is also a key issue, especially with smaller face amount, you know, middle market insurance. Most people are looking for $100,000, $200,000 in life insurance. These aren't going to be your big fishes, you know, out of your, you know, the cases that you write. But it is very profitable if you do it with Fidelity and with a non-medical process. This is just an apples-to-apples comparison here. Again, I'm not going to read it to you. It's in the presentation that I'm going to leave as a leave behind. But if you take, you know, what I call cheap term, which are those lower face amount term policies that people are looking for, and you place them with traditional, fully underwritten, you know, paramed, case management, follow-up, APSs, and you know, you look at that, and this is just an apples-to-apples comparison in regard to premium. Traditionally, the economics lend it to be not as profitable, because you're first of all going to have lower placement rates. People drop out of the process. You're going to have to, you know, wait 6, 10, 12 weeks to get that policy placed. A lot of carriers have non-commissionable policy fees, and then you've got your overhead. Time is money, or if you're paying someone to follow up with case management, you know, it's not as profitable as if you take that same amount of life insurance, or the same, you know, comparison, and place those cheap term, lower face amount term policies with a non-med product like Fidelity Life's Rapid Decision Term. You're going to have a higher placement rate. Because it is a 24 to 48 hour process. We do pride ourselves on that. We truly do underwrite and approve cases in 24 to 48 hours. So there is no case management needed, because there is no paramed to follow up on. There is no APS to follow up on. It truly is a very efficient process. So as you can see, apples to apples, you're going to increase your paid premium by quite a bit. And then also, Fidelity Life is competitive. A lot of agents, I think, are under the assumption that, you know, if you go with simplified issue or some non-med carriers, your client is going to have to pay 2-3 times as much for the same amount of coverage. I did a comparison, and here again, I'm not going to go through, you know, this bullet, or premium by premium, but I took a term quoter, just an iPipeline quoter, and I put in $100,000, standard risk, standard rate class, looking at male and female, age, 35, 45, 55, and you can see across the board when you take the average. Now, this is not the lowest premium in a standard when you run that term quoter. It's certainly not the highest, but I just took the average just to give you a comparison where Fidelity falls. And as you can see, in a lot of cells, it's a matter of $1, $1.50 more. This is a monthly premium, and in some cases, it's even less. So it is competitive. And then I also like to point out our return of premium is very, very competitive. I'll go into a little bit more about the return of premium, but this is another comparison on the bottom chart there where I did the same thing, put it in a term quoter. And just to note, you can see Fidelity really rises to the top in all these scenarios, and all those other carriers that are listed there, that would be the fully underwritten route. So on a non-med basis, you can offer someone $100,000, $250,000 in term insurance, add the return of premium rider, and it's going to be less cost than what they would have to go through on a fully underwritten term policy. So definitely competitive. And then now to get into the products, we have a suite of products called Rapid Decision, and the reason they're called Rapid Decision is because the decision is very quick. It is 24 to 48 hours. Rapid Decision Term is our flagship product. We launched this or started selling this product in 2006, and it has grown exponentially over the years. Our growth has continued to grow even in the economic times that we've had. Our paid premium year to year has grown significantly, and Rapid Decision Term has been a big part of that. It's a fully underwritten, guaranteed level term product with a max issue limit of $300,000 to age 45. You can see the other issue limits there, up to $200,000 to age 55, up to $100,000 to age 65, and then even seniors can get up to $25,000 on this truly non-med product. It is guaranteed level term, and it is underwritten, like I said, in 24 to 48 hours. In lieu of a paramed or any kind of medical records or saliva or anything like that, what we do is we look at third-party data. We look at the MIB. We're pulling a pharmacy database report on every individual, as well as a motor vehicle report. So those three pieces of third-party data, along with our risk assessment from the underwriters and our rate class criteria, and that's the other booklet that I'm handing out, kind of gives you a snapshot of all the products and as well as the underwriting criteria, allows our underwriters to process and approve these that quickly. It does have some bells and whistles. It has some optional riders, accidental death benefit, dependent child rider, a waiver of premium, and then my favorite, the return of premium. And then it has an included rider, the accelerated death benefit in the event of terminal diagnosis. The individual can take up to 50% of their death benefit and use that for final costs, medical expenses, etc. So that's Rapid Decision Term. In the same suite of Rapid Decision products, we have a Universal Life. This is a flexible premium universal life, so it's not like a guaranteed of 100. It's got some great competitive cash values. You can see there our current 4.25 interest in years 1 drops down 1% in years 2 through 15, and then goes back up. This is designed as more of an accumulation type product. It's got the same issue limits up to $300,000 to age 45, etc., as the Rapid Decision Term. It's got some riders as well. The accidental death benefit, the waiver of premium is a chosen waiver of premium. It's flexible as well. And the ADB waiver premium, independent child rider are on there. So like I said, it's just kind of a mirror of the Rapid Decision Term, just on a universal life chassis. Underwritten again, non-med, no parameds, no APSs in 24 to 48 hours. So with this product, the guaranteed interest rate, 2.5, is at a minimum premium is going to provide a 20-year no-lapse guarantee. Target obviously will take that policy out much further, and here again it is a flexible premium. And then the third product in the Rapid Decision portfolio is a mortgage product. This isn't mortgage protection in the true sense that it's a decreasing term. This is just a level term policy that's available. We're able to go up to $500,000 on a truly non-med basis with this product up to age 45. The qualifier for that would be either a first mortgage or the refinance of a mortgage within the past 13 months. So with that qualifier, we were able to go up to $500,000. Here again, non-med, no blood, no urine. And we also have a 40-year level term available. So that's pretty neat. Someone that comes across, so I think the mortgage market is turning around. We've seen some growth recently with the mortgage term product. But someone in their 20s and 30s are purchasing their first home. They can get up to $500,000 in just level term protection and hang on to that, for up to 40 years. And then if you tack on the return of premium on the mortgage product is even more cost effective. On a 30-year term, it's only 25% additional to add the return of premium. So for $1,000 premium for an extra $250, for the next 30 years, they're going to have life insurance protection for their family, and then the individual does not, the benefit's not paid out, which is obviously for them the best case scenario, but they get all their money back, so it's a win-win situation. The mortgage product does have the same riders as the rapid decision term, and in addition to that, it has a couple additional riders, a disability income rider, which would provide an income benefit up to $2,000 to the insured if they are disabled and the nature of the disability was due to an accident, and we'll pay that up to 24 months. And it also has an involuntary waiver of premium, or I'm sorry, an involuntary unemployment waiver of premium available as well. So here again, if they lose their job, they get laid off, they can hang on to their mortgage protection and not worry about that because we'll waive the premiums for up to 15 months. It also has an other insured, so a husband and wife or spouse partners on a mortgage can be on the same policy. So that's the rapid decision portfolio as far as the products and the issue limits and the features. And how, just to get a little bit more into the rapid decision and how we underwrite, and just to kind of give you an idea, when you think non-med, a lot of people think simplified issue and they think table loaded, like a standard table 4. Our rate classes are true, standard. There's a select rate class, which is a preferred rate. So for those individuals who have little or no health conditions, they can actually get a preferred rate. So in a non-med world, traditionally, regardless of their health, someone's going to get a standard table 4 rate class. So what we've tried to do with the rapid decision portfolio is take the convenience of a non-med product, and where simplified issues maybe on this end of the spectrum and the cheap term fully underwritten policies are on this end of the spectrum. We're trying to close that gap and make it more competitive, and here again that would fit the middle market, these lower face amount term policies where it's sometimes hard to make money and a lot of agents maybe shy away from those cases. So I need the slide. No, I'm just kidding. So anyway, so it is individually underwritten, so everybody's going to get the best rate class available based on their health. The risk assessment and the rate class criteria are in those little booklets that I handed out. Kind of the toolkit gives you all the criteria. Some baseline qualifiers, just to kind of a note that I always, when I train agents, I always talk about some of the key things. U.S. citizenship, permanent resident green card status, that's just a qualifier for our rapid decision products, as well as valid driver's license. And a lot of agents say, well, why do we have to have a valid driver's license? It's just life insurance. It's a third of our risk assessment. We're pulling a motor vehicle report. Without a valid driver's license, we can't pull a motor vehicle report. So we need that, and if someone just chooses not to drive, unfortunately, they don't qualify for our rapid decision product. So kind of a key thing, no state IDs, no suspended licenses, et cetera. So one of the big, in new agents, when they send in applications and they get declines, that's one of the biggest ones that I see. So just kind of a mental note. Primary care physician over age 55, because here again, it's non-med, so someone who's 56, 60, and they say, oh, I'm so healthy, I don't even go to the doctor, I haven't been in 10 years, they're not going to qualify either. They have to have a primary care physician to qualify for the rapid decision. And then other little ones, unfortunately, a lot of America is now on some kind of antidepressant or anxiety medication or something of that nature. As long as there's no significant issues going on as far as psychiatric treatment, if it's just your, stressful life, or maybe it's a life event, that's going to be okay. And then another really big one is no prior declines. A lot of times agents, I've come across agents that, because here again, they think non-med, they think simplified issue, or they almost lump it with guaranteed issue. They get a decline, they're like, oh, well, let's throw it at Fidelity. It's non-med, it might go through. If we pull an MIB and we see that they've have something that the MIB doesn't show declines, but if they answer the question that they've been declined by a fully underwritten carrier, it'll automatically disqualify them. And then if we see something on that MIB that's a condition that goes beyond our underwriting, we would know that as well. So it is underwritten. It's not like people are not going to, have their records checked for this kind of product. So that's something that you need to set forth as an expectation. So that's rapid decision and the processes and procedures. Currently, we have, of course, paper applications. They can be pulled, state-specific off our website. We also have a rapid app system, and it's our own technology. I think we were probably one of the first carriers that developed this, along with our innovation. That's our tagline, innovation is our policy. Our IT developers came up with the rapid app process. I actually used it back in 2006 when I was an agent for a short time, where you could sell over the phone. It's a online technology that takes the agent and the client through the application, goes through, and first of all, it also gets you a clean application, because there's fields that have to be filled in, and if you don't have the fields filled in, you can't get to the electronic signature portion of the online app. So it kind of forces someone to have a clean app. Hence, there's no need then for case management, because no one's scrubbing the apps, because you can't get to the app if you don't do it in that manner. So the rapid app system is a really great system. All of the products that I'm talking about are available, other than the UL, just because there's an illustration involved. But you can run all of them through the rapid app system, which, like I said, is a really great, slick system. We have webinars on it, and et cetera. So, and then the rapid app system, what it does, so it takes it through, and then it bundles all the information into secured links that are locked. They're passcode protected. They're sent to the client. So an agent can literally sell over the phone. They don't have to drive across town for that $100,000 term life insurance policy for their client. They can call them on the phone, gather the information. Like I said, it bundles it into a secured link, sends it to them. They click on their email, open up the link, put in their passcode. They review it and literally click with the mouse, I agree, I agree. They type in their name, and it goes right to Fidelity. So here again, very efficient, because the agent does not need to do anything other than, thank you very much, I'll call you when your policy's ready for delivery. Or you can even email the policy, because once it's issued, it's in the pending business detail, and it can be sent to your client within that day or two, so from the time that it's been submitted. So let's see. This is just a snapshot from that toolkit. I'm not going to go into the underwriting criteria. You guys would probably all nod off if I did. So, but the point here is that it is individually underwritten to rate classes. So here again, there's a select, there's a standard, and then there's substandard rate classes available through 4 tables. So most of the conditions are going to be within one of these realms. And here again, I think over last year, about 65% of the policies that we issued were at that select rate class. So just to kind of give you an indication that it does come through, and we do issue at that preferred rate quite often. And then obviously for people that do have more significant health issues, we can offer them coverage as well. And so now, to kind of switch gears a little bit, we have the rapid decision portfolio, and then also kind of following along with how Fidelity is kind of a niche carrier. We serve the middle market. This is our graded death benefit came to us as a brokerage product. The GDB is a fantastic option for agents to have in their pocket, and brokers obviously also have it, hence why it was originally a brokerage product. It is an outlet for declines. I mean, what do you generally do with your declines now? If you get a client, they've been outright declined, you've got to probably have limited options. You can offer them maybe a guaranteed issue, maybe a minimum of $25,000 or $50,000. It's probably going to be a really expensive whole life. Our graded death benefit is about as close as you can get to a guaranteed issue, but it is underwritten, and there is criteria, but it's an accept, reject. So there's there's about 12, 13 questions that are knockouts for the graded death benefit. And I don't know if they're on the next slide or not, but basically I've repeated them so many times. It's any history of AIDS, HIV, Alzheimer's, mental retardation, or Downs, or requiring living assistance. So your client would have to be able to answer no to those. And then there's a second set of 2-year history, so a 2-year look back, that the client would have to be able to answer no to no history of cancer, heart attack, stroke, chemo, radiation, diagnosis of cancer, drug use, criminal activity, more than 1 DUI. So outside of that, they would qualify for the graded death benefit, which, as you can imagine, if you came across someone who got declined because maybe they had a heart attack 3 years ago, where are you going to place that coverage? You're probably not going to be able to place that coverage unless you go to like a guaranteed issue type product. But with the graded, you can. And then the other unique thing, or what I like about the graded, is there's a lot of opportunity for flexibility because there's term and whole life available, and it goes all the way up to $250,000 in face amount available. So the whole life is very simple to understand. It's level premiums and level face amount to age 120. Very simple. You can see the issue limits there. But the term is where the flexibility comes into play, because there's a 10, 20, and 30-year term available. And how that works is that it's level premiums for the term and level face amount for the term, so whether that's 10, 20, or 30 years. But it's guaranteed renewable with no further proof of insurability in the first anniversary year after the initial term. So in the 11th, the 21st, or the 31st year, guaranteed renewable, no increase in premium, and a one-time decrease in the face amount based on the original issue age, which you can see is kind of listed there. And then it's renewable to age 80 or for a certain amount of years. So here again, depending on your client's issue, whether it's lifestyle or if it's health related, this really gives you some flexibility with the higher face amount, the different opportunities of the the term lengths, where you can really provide them some coverage that fits them the best if they do fall in that impaired risk or uninsurable category. It's graded in years 1 and 2, and that's a dollar amount per thousand. So generally it's premium plus 40, 50%, and then year 2 it doubles, and then year 3 on it's 100% of the death benefit. So that's the graded, and here again, important to remember, it's not guaranteed issue. There are knockout questions. We do pull an MIB and the pharmacy and a motor vehicle report on there, but if you look at the rate class criteria and the questions on the application, it truly is just a accept, reject. We're only doing that because we're just making sure that there's nothing on there that would lead us to believe that they're not answering the questions forthright. And then the last product I want to mention is our accidental death benefit. Our standalone accidental death benefit, we sold more of this last year than we had projected. We certainly surpassed those projections by far on this product. This is a guaranteed issue. There's no medical underwriting. The only requirement is U.S. citizenship or permanent resident green card status. It's very simple. Ages 20 to 65, issue limits 50,000 to 500,000. That's it. So someone who's 21 years old or someone who's 62 years old is going to pay about $30 a month for $300,000 in accidental death benefit coverage. This is a great ancillary sale to a health sale. A lot of our health, we've got some relationships with some health centers that tack this on to every, or offer it to every client on the back end of a health sale. It's very easy to write with the online application process. It's got some features in regard to a family rider and an auto safety and travel accident benefit automatically included, where the auto safety, it's 10% additional if the individual dies in an auto accident and they're wearing a seatbelt, and it's 100% additional if they die in an accident on a common carrier, so plane crash, train wreck. And then it also has a optional return of premium rider, which is kind of cool. It's a 15, 20, 25, or 30-year term depending on the issue age, but here again it becomes a win-win situation, because if they don't, they go out through those years, they have life insurance protection, but we're going to give them their money back on the return of premium. So that's the accidental death benefit. And now what I would like to do is just kind of recap some of the tips. This is more for training purposes, what I usually go through. We have a lot of resources. We take the products and we take our systems and we take our support and we try and wrap them in a nice package and put a pretty bow on them to deliver them to the agents, knowing that, like I said, this is not your, higher face amount, big fish, if you will. This is something that can be done profitably and efficiently So just little tips, you know, asking the application questions, accurate phone numbers, etc. This is, like I said, more of a training, but a little field underwriting on the front end certainly can save you a lot of money and time on the back end. So that's little tips on how to get, you know, more premium placed. And then I want to finish off with just a little bit of some sales ideas. Because we do have the different products and the different things available, like in the rapid decision term, this is just one sales approach that I like to talk about to agents. With our rapid decision portfolio, you can certainly offer someone, you know, in the middle market, someone maybe who's just looking for, you know, a couple $100,000 to protect their family for income replacement in the event that, you know, something happens to them. You can certainly go with option A, which would just be a straight 20-year term, $200,000. It's going to be $28 a month, pretty cost effective, pretty easy. It's going to be non-med. You could go a step further and offer someone, you know, that same product, a little bit more premium, and add the return of premium rider, so that, you know, after 20 years, they don't die, their family's been protected, but, you know, they get a check for just under $13,000, which is pretty neat. I think that a lot of people in, you know, middle America, they're probably not doing a lot of, you know, financial planning or setting money aside. This is kind of a forced savings, and it really provides a value, you know, for your client. And then before I get too far into that, option C, you can certainly, with a rapid decision UL, you can offer the Cadillac, a little bit more permanent protection. If they want to put some money aside, a cash accumulation product, you can offer the rapid decision UL. All available in the same 24 to 48 hours. You know, Mr. Client, you don't have to go through a paramed. No one's going to come out to the house, poke you with a needle, etc., make you squeal like a pig. But when you offer this, I mean, everybody as a consumer, I know I do, like to have options, right? I don't want a ton. Don't give me 100 options. I don't want to know, you know, that many options. But with this, you can give them a, you know, kind of a bronze, silver, gold option, if you will. And what do most people do when you give them a really cheap option, you give them a really expensive option, and you give them a middle of the road? They're going to pick the middle of the road, right? So not only have you increased your premium and your commission because you've got a little bit higher premium on the policy, you're also providing them a service because, like I said, after 20 years, they're going to get a check back for all their money. What other insurance that they purchase are they going to get their money back on? Their auto insurance? No. Their home insurance? No. But for their life insurance, they can get all their money back. So to take it one step further, with the portfolio, what you could also do is mix it up. Offer the $200,000 rapid decision term, but tell, you know, the client, you say, you know what, you're young, you're healthy now, you can go through this process. We'll put you in the $200,000 20-year. After 20 years, we're going to give you back all that money. But why don't we also put on a $50,000 UL? Same process, can be done all at once. And then past retirement, you're going to have something that goes on a little bit more permanent coverage. So boom, you're done. You can, you know, like I said, they don't have to then think about it. Well, gosh, what happens if, you know, their health obviously would be much different. Certainly the rates are going to be much different. But you can kind of provide this little, you know, planning in a very simple, easy way by just combining some of these products together. So that is pretty much all I have to say about that. No, the middle market is really kind of where, like I said, where we fit, especially in the independent IMO world that I manage that channel. You know, if you kind of in recap, you've got a complete non-med portfolio. You've got the rapid decision term, you've got the UL, you've got the mortgage, you've got all the riders, the options, you've got the graded death benefit term and whole life, and you've got the accidental death benefit, all available for very quick, efficient processing of these cases. We've got the rapid decision underwriting, so it's quick. We've got the online technology, and we pay commissions weekly. So for cases under $300,000, think of Fidelity, and think of Fidelity because I think that when you start to get used to that, or your agents do, and you start to gravitate toward that, you're probably not going to go back. So with that,